Time now for Futures in Focus. Joining us from the CME is Bob Iaccino of Path Trading Partners. Bob, did this deal have any reverberation at all throughout the CME? Does it mean anything to traders trading in futures?
Good morning, Monty. It's a discussion point, but it's not affecting front-month price. Front-month price is where the speculators are in. Those are generally short-term in nature. And by the way, we're only halfway to the record specs in the long positions, according to the CFTC, so we could still have a way to go there. But when you're looking at this, yes, it is an effect further out the curve because it is a cap X move under sort of the signs of the actual buyout toward the Permian, toward shale. And as we know, the U.S. production has been a little lackluster at the beginning of this year. We had our first jump in rig counts, in the Baker Hughes rig counts last week in about 6 or 7 weeks, and production unexpectedly fell in January and parts of February. So it is kind of a thing longer out to the curve, but the front month hasn't been affected.
What did you make of the diverging messages yesterday? So we had the IEA saying demand is likely to be lower, but yet we had stockpiles higher, and now you've just said, you know, that maybe that's not fully the case. Maybe stockpiles are actually going down. We also had OPEC promising more cuts.
Well, in short term, again, Vonnie, you're looking, in my opinion, at refinery utilization. We've got turnaround that started on the back of some unscheduled refinery utilization. So we saw a pretty big dip from 94 that we saw about 8 weeks ago, all the way down to 86 and change on the utilization of those refineries. That's immediate demand. So that's what I've been watching lately, and that's starting to creep up. So I think that, in combination with the potential for global demand to possibly bump up after a U.S.-China trade deal, if it ever happens, we could see a little bit more demand out of India, a little bit more demand out of China. But the global economy, that engine has to get greased, and it only gets greased by a trade deal.
And finally, Bob, I have to ask you about the dollar index, 96.81. Do you anticipate any change there into next week?
It's going a little bit lower. I think we'll get to about 96.5, but it should base from there. That's a Fed thing. This is Fed policy that's being played in the dollar index right now. Weakness is probably what we're looking at short term.
All right, Bob Iaccino of Path Trading Partners joining us there from the CME. Thank you.